In this video, I'm revealing my favorite model with checklists that I look for every single day at a specific time. If I see it, I'll take it with no doubt. I'll show you some trades that I took myself and go over the checklist. If anyone needs a one-on-one mentorship, check out the description. This is Mulham and let's get into it. Okay guys, so instead of going over a diagram and explain the strategy there and then go and take examples, in this video, I'll take another approach and we're gonna go over the example itself and I'm gonna apply the checklist here. And I hope that's a better way to learn right here. So we're starting with this right here. This is GBP/USD. This is my favorite pair to trade. And we are on the 15 minutes. So when it comes to looking at the structure, it's going to be the 15 minutes. And then we're going to go to a lower time frame to find an entry. Now, starting with the first thing on the checklist, which is the order flow on the higher time frame. So if I just go right here, even on the same time frame, if I zoom out, I can see that price has been going lower. And if I go to the 4-hour, for example, I can simply see that price clearly going lower and lower and lower. So the order flow is going bearish. You see how most of the period raised on the, for example, this order block on the higher time frame, it's holding, price coming lower, fair value gap holding, and price has been doing multiple breaker structure to the downside. So going back to the 15 minutes and we're done with the first checklist. Now this is the Asian session from 20 or 8 p.m. to midnight. This is the Asian session. Now, the second one is we look for period raise on the direction of the order flow. Now, we can also expect a sweep to the lower side and going up, right? But the high probability one is taking the high and then going lower. Why? Because this is the order flow direction. So this is the Asian high. Is there a period array above it? I don't see nothing here. There is this fair value gap, but it's slightly not too close to the Asian high. In this case, I'm going to go to the higher time frame. So we are in the 15 minutes. So I'm going to start with the 1 hour. And what do we see here? We can clearly see that we have this fair value gap right here. And it's directly above the Asian high. So that's a high probability trade or high probability potential right here for price to come lower. After taking liquidity, when we have price taking liquidity and coming into a period array, that's the high probability sweep. So this is the second thing. And we can see if we take it to the left, it's also aligning with an old low, right? 3 things aligning at the same time. That's a high probability trade. Now back to the 15 minutes. And what is the third thing on the checklist? I want to see a sweep of the high into the period array in the kill zone with a wick. So let's see right here. I'm going to play. Now, the kill zone, the London kill zone started here, 2 a.m. So let's see if we have, and now you see price coming there. And right here, we have price sweeping the Asian high, price into the fair value gap, and only with a wick. When I see this, that's the third one done. Now, the fourth one, which is simply the entry, I'm going to go to a lower time frame. So we are in the 15 minutes. You can go to the 5 minutes, 3 minutes, 2 minutes, 1 minute. For this example, we're going to go to the 1 minute. And what do we see here? So simply price coming lower. You could simply enter with just a fair value gap, the first fair value gap to be presented, you enter from, or you could wait for a change of character, or you could wait for a fair value gap aligning with a breaker block, or you could wait for all those three together, right? Market structure shift, fair value gap aligning with a breaker block. But mainly my main entry is the fair value gap. So we can see a very small fair value gap right here. This can be my entry. Now I'm going to enter here. Let's say 50%, stop loss just above the high. Usually I would be aiming for the Asian low. So this is the Asian low all the way right here. I'll be aiming for that one and I'll be targeting the body, not the wick, just in case. And this is already 8R, 8.5. That's a huge trade, right? So I'm going to wait for price to come there. And price actually goes lower and lower. And that started to come up. So now we have another fair value gap here, but this is I think about 50%. So if I grab my Fibonacci from here to here, we can simply see that here's the 50% and this fair value gap is on the 50%, but this fair value gap on the OTE. So from 79 to 62, we have this fair value gap. So that's a high probability one. I'm removing this and let's see where price goes to. So very close to the fair value gap and we get entry here and then price goes lower. So to manage the trade here and to know where price is going to, what do we have here? So price mitigate the first fair value gap. And what did we discuss about this? When we have first fair value gap mitigated, I look at the second fair value gap and see if that one is going to be respected. So we have a small fair value gap here. If this one is respected, I would know that I'm in the right direction. And price actually respects that fair value gap, doesn't close out of it. And then we have a third fair value gap right here. So this one also should be respected in one way or another, and price goes lower. So there you go, and take profit. That's at 8.5, and you were in the trade for about, let's see, from here. So from here to here, that's only 32 minutes, and you're getting 8R. This is my favorite strategy ever. It's the Asian sweep, and then with some tick lists, with some confluences to look for, and you get this type of entry. So the last example was here. It was the 21st of September, Thursday. Then we had Friday, and then Sunday. So just 2 trading days, and then we had this next setup. Let's take a look at this and see what's happening. So first, we agreed that the order flow was bearish. So mostly would be focused on taking bearish trades, right? Short positions. Now, when it comes to short positions, you can always extend your take profit. That's not only the Asian low. So you see right here, we could have taken all of these profits. Now, when we go bearish, we're going to take some partials at the Asian low, for example, but then we could extend the profits more. However, in this case, what do we have right here? So this is the Asian high. Asian low is right here. This is the Asian low. And we can see price taking this Asian low right here and price going lower. This is 2 a.m. and the low was here. Sometime what I'm going to do is, if price went lower or up other than the Asian range on the 2 hour between midnight and 2 a.m., I would extend my Asian session. So I would put it just like this. And you could have entered a trade here. So let's see. I would actually start with the 1 minute first. Then if I don't see a fair value gap or nothing, I would switch to the 3 minutes, 5 minutes, and see. Because sometimes you would see no fair value gap on the 1 minute, but a fair value gap on the 5 minutes. I'm going to start from the 1 minute and then go to the 5 minutes. So let's see right here if there is anything. So we have the sweep, price going up, and there is this fair value gap right here actually. And it's actually aligning. So there is a market structure shift on the 1 minute. And this one is aligning with a breaker block right here. So we have this fair value gap aligning with a breaker block. So this could work. What we're going to do right here is this. We're going to enter a trade, or at the beginning of the fair value gap, right? This is where the fair value gap and breaker block align. So somewhere in here, stop loss would be below this low of a candle, or you could put it right here. But I'm going to put it right here just because this is a breaker and fair value gap. And I'm going to target the Asian high. That's a 4-1. If we go to the 5 minutes, is there a fair value gap here? There's nothing. So there's nothing on the 5 minutes. See, price goes up, come lower, and we get the entry. You see, no drawdown entry. Okay, now there's some drawdown. Price was very close to the stop loss, but now going up. And we have the take profit. So now, just because I'm against the order flow, I'm not going to go and target, much more than the Asian high. I'm going to be closing my whole position here. Now, switching to the 15 minutes to see what's happening here. What do we see here? So we took our first trade, and it was a 4.5, and it was a winning trade. But now we have another thing. Price actually takes the Asian high, and what do we have above the Asian high? We have a bearish fair value gap. This bearish fair value gap, we had this unfilled part of it aligning with the Asian high, and price now take Asian high with only a wick. So that's a high probability trade right here. I'm going to switch to the 1 minute, and it's also in the kill zone. So now we already took this trade, for example. Now we can take a trade targeting this low, and maybe much more, because we are with the order flow, right? But we're going to make sure to take some partials on the way. Switching to the 1 minute, see what we have here. So price takes this high, only with a wick 2 in the 1 minute, goes lower, no fair value gap, no fair value gap. There's no fair value gap, but switching to the 5 minutes, see? Okay, on the 5 minutes, we have a fair value gap being created right here. So we go to 1 minute, there's no fair value gap. On the 5 minutes, there is a very nice fair value gap right here. So I'm going to be taking this one right here, entry from here, like 50%, stop loss above the high. And I'm going to be targeting, my first target is this low. So that's already 3.6. And also this low. And you could have extended more and more. Why? Because we are with the order flow. So let's see how it goes. So entry and then immediately going lower. And I'm just curious to see what's going to happen after. So price give, okay, and there is still no stop loss, and price goes lower. So you see, just because we are with the order flow, this could be like a 13, 12, 10R, whatever. It depends on how much you could have hold, but it was a very nice trade. Now there's sometimes where price will not only take the Asian high or low, but it's going to take a fractal low or a fractal high that is below the Asian low. So for example, right here, we have this Asian low, price actually closed below it. Now we would be looking at a fractal low below this low. We have this one right here, and we have a fair value gap below it. You see where price reacted from? It did not close below this low. Right here, it did not close below. Started to go up. You could apply this anywhere. You see right here, same thing. Price first takes the Asian low, went lower. Maybe this is going to be a losing trade for you. But then looking at this high right here, price actually take this high with a wick. You could have also entered here. Now, if you just blend this with the daily bias and the order flow, you're going to be ahead of the game right here also. I mean, the indicator is kind of messed up here, but this is the Asian high. Price takes it with a wick, started going lower. Same thing here. Okay, here it would be a losing trade, but I'm not a fan of entering those trades. First of all, it's against the order flow. Second of all, a very big wick with a huge stop loss. That's not something I prefer. This one right here, this one, the one we talked about, Asian high with a wick going lower. You see what you could have gotten here from this trade? All of this. Your entry was here, literally catching the high, and all of this after is price going lower, basically, after you call this trade. So I would really advise you to follow this, practice it, and see what time frame you want to use, what type of entry use. I already explained what I do, what I like. You could have used this with GU and EU, both of those. See which one is, giving you better entries based on the POIs, based on the, the order flow, and also the liquidity levels, and trade based on them. That's all you need. This is something, if you just focus on, you'll be ahead of the game. So if you guys want, those types of videos, please make sure to hit the like button, subscribe, and share this video with your friends, because if I don't see a lot of views, if I don't see a lot of engagement, I'm not going to be that motivated to share everything that I know. So hopefully you guys understand this, and also join the Discord as we do seminars there, live trading, and a lot of other stuff, educational stuff. This is Molham, and I will see you next video.